So, kicking off my list is a tool with a beautiful name, Echo Forecast by LuxAlgo. You know what the main pain point for a trader is? It's that the market keeps repeating itself, but we just don't notice it. Patterns, formations, price behavior models, they're like fingerprints that keep showing up on the chart over and over again. How does this indicator work? Imagine you're Sherlock Holmes. You arrive at the crime scene, the current market, and start collecting evidence. How the price has moved over the last 10 to 15 candles. Then you go to the police archives, the price history, and look for cases with exactly the same evidence. You want to find an instance in the past where the price behaved just like it does now. Echo Forecast does exactly that, but instead of a magnifying glass, it uses math. It takes the segment you specify, the evaluation window, and uses the correlation coefficient to search the history for the most similar section. When 100% match is found, the indicator looks at what happened after that historical pattern and projects it onto today's chart. That's the very echo from the past. We've all heard the phrase, history repeats itself. This indicator digitizes that phrase. You can adjust the forecast depth, the forecast window. Want to look 5 candles ahead or 20? But there's a catch. The developers themselves warn, don't become a slave to the indicator. Echo Forecast is an advisor, not the ultimate truth. It is best to use it as a filter. For example, if you see a resistance level and the indicator shows that the price is broken through this level after a similar pattern, this is a reason to take a closer look at the trade. Number 2, LuxAlgo again. Try MACD price forecasting. Everyone knows it. This is a classic that appears on every other chart, but the classic only shows the current state. Here's a bullish crossover, here's a bearish one. But what happens next? This indicator takes historical data and asks, how did the price usually behave after the same signal in the past? What does this look like in practice? When MACD signals a buy, the indicator scans history for similar signals, considering trend strength, position relative to zero, and the signal line, averaging the subsequent price movement. This generates a chart forecast of the likely price path. Check out these settings. You can set an offset if you think the market is overheated right now and is going to fall. You add a bearish bias and the indicator will show you targets to the downside. This isn't guesswork, it's math, with your adjustment for context. But it's important to understand, this is an averaged forecast. The market might move differently, but now you have a map of the terrain, and if the price goes strongly against the forecast, it might mean your initial analysis was wrong. Number 3 on our hit parade is next pivot projection. The name speaks for itself, projection of the next reversal. This is an experimental indicator that builds a forecast based on the analysis of past reversal points, pivots, and divergences. What's the idea? The indicator analyzes the history and finds how previous local highs and lows were formed. Then it projects where the next significant level should form. And the coolest part, it shows the percentages right next to it. For example, you see a mark on the chart at $66,760, and next to it it says the probability is 57%. This means that based on historical data, the probability of reaching this target before a reversal is 57%. Here's a real-life example. Imagine the price is approaching a demand zone, a strong support level. The indicator shows that from this level, there's a 93% chance the price will go up to 87,280. What does this give you? First, confidence. Second, a specific target for your take profit. You're not just hoping it might go up, you know where it's statistically most likely to go up to. Let's move on. Number 4, and here I guarantee you've never seen anything like this. The Monte Carlo Future Moves indicator from ChartPrag. Have you heard of the Monte Carlo method? In short, it's when a computer runs through a million scenarios to figure out which one is most likely. It's used in nuclear physics, rocket science, and now in trading. Imagine you're dropping a ball onto a sandhill. It could roll into 1,000 different dips. Monte Carlo Future Moves shows which dips are the deepest. In other words, where the ball or the price is most likely to fall. On the chart, it looks like a heat map and lines. Bright blue or pink zones are areas where the price is highly likely to be found. The lighter ones mean a lower probability. The algorithm also draws bullish and bearish scenarios, the most likely paths. How do you use it? Let's say you want to go long. You look at the arrows. One of them matches the direction you've identified in your analysis. That's your target. And you set your stop loss beyond the arrows in the opposite direction, where the probability of movement is lower. That's objective. It's not just like, I think the stop should go here. The model shows that this is where the chance of loss is minimal. This tool's perfect for medium-term trading. Periods that are too short create noise, while those that are too long give you a blurry picture. But the golden mean is optimal. And finally, to wrap up today's episode, Meet Next Pivot from Chaos of Trading. What does it do? It takes the current segment of the market. You can set up to 100 candles and it searches the history for the most similar segment. But unlike Echo Forecast, it uses not just one, but 6 comparison methods at the same time. Which methods? Spearman, Pearson, absolute difference, cosine similarity, mean squared error, and Kendall. Why so many? Because the market is multifaceted. One method works better in a trend, another in a flat market, and a third during volatile movements. The indicator uses them to find that very snapshot from the past that fits the current situation perfectly. Features. First, price forecast for 250 candles ahead. Yes, you heard that right. You can see the projected trajectory of movement weeks in advance. Second, a zigzag forecast. This is a smooth line filtered from noise. It shows the overall direction of the trend in the future. Third, linear regression. The indicator builds channels, showing probable support and resistance zones based on historical data. Ladies and gentlemen, we've covered 5 awesome tools. Remember, none of these indicators gives a 100% guarantee. The market is a living organism. News can come out, the central bank might intervene, a black swan event can happen, and so on. Indicators show the most likely scenario, not the only possible one. Before you use real money, do this. Open a demo account, set up the indicators you're interested in, trade with them for a month, and keep track of your mistakes and successes. Only when you understand the logic behind each tool, when you see how they can mislead you and when they tell the truth, only then should you let them near your real deposit. The market is a place where knowledge turns into money. If you found this episode helpful, give it a like and subscribe on YouTube and Telegram. Wishing you successful trades.